one of the biggest things or misconceptions is that it's easy, right? Like, and I feel like that goes for just any real estate investing. So I started doing this full-time 20 years ago. Started in the single family space, did that for about 12 years, then small multi until where I'm at now, right? None of that was easy. Even the single family homes, that wasn't easy. And I think a lot of it is portrayed like it's easy. Just put your money in real estate and you'll make all these returns. It's not that simple. None of it's that simple. So I think the property management aspect of multifamily, asset management, property management, whatever you want to call it, it's a lot more difficult than people think. And you really don't see that till you get in it. You own an apartment and you're counting on this third party company to manage your property for you, and you have that misconception. You think it's easy. It's not. It's full-time babysitting. You got to be pushing constantly, and a lot of people have lost money because of that in the last 2 years.
I got a question on new construction. Approximately here in Texas only, approximately what is the cost per square foot to build the new construction in here in Texas?
I mean, it really does depend on a lot of different factors. I mean, are you just talking about this garden style? Are you talking about a 10-story building?
I'm talking about like a standard. What's going up a lot of days is 3 to 4 stories, or a 3 to 4 story building, approximately 120, 140 units with an attached garage for people to park in.
So garages in buildings?
Exactly.
You can see we already have multiple things changing as we're just
Exactly.
talking about.
Yeah.
So I've put together pricing people that ranges from say $130 a square foot all the way to $190 a square foot. So I mean, what I would recommend is kind of what we're talking about risk management too. Like, work with somebody that can help you figure out the best option for what you're trying to, where do you need it to pencil out?
Mm-hmm.
And then have a contractor that will be transparent with you and tell you, give you good advice, right? Like, there's a lot of factors that come into play.
Mm-hmm.
You know, what is the lot like? Do you need a detention pond for runoff? Are your utility access points 300 yards away?
Mm-hmm.
There's so many factors like that can go in before you even get to the vertical structure, right?
Right.
What is the soil that's under the building? That may require you to do, injected stabilization plus a post-tension slab. Like, there's so many things that could raise or lower the per square foot number, right? So, but if you're building garden-style multifamily, you shouldn't be like $200-something a square foot unless there's something very unique happening, right?
Right.
Just like if somebody tells you they're going to build it for $100 a square foot, I would say, how are you doing that? But really how, right? Like, dig into that question. Like, not just, oh, well, we have the deal on a supplier. There's great suppliers in this room that we work with, but get those answers, right? You know, and because that was what I was going to say. You mentioned about storms and analyzing your risk, right? So make good choices with your material finishes. Make good choices about waterproofing and vapor barriers. You know, these little details that go into the build, they may be small amounts, but they give a huge return over time on that property if you're building ground up.
Okay.
You know, those are things that get me fired up, right? Like,
Right.
how do you make the building great right from the get-go, which is going to give you a great investment long term, right? So,
You want a contractor involved early,
Yes.
so that you don't have an architect or designer that puts this together and it's going to cost all this money when the contractor could have been helping you through that process or kind of, value engineered a lot of it.
Okay, and then also for the banking side, the LTV that you guys lend, and what credit score is that based off of?
So I would say credit score from a nominal perspective of what that number looks like is not as material as what your history is, what you've done, your experience in it. I would say that somebody who's run into an issue, but they worked through the issue,
Mm-hmm.
is probably more valuable than someone who's never had a problem before and they seem, they haven't, because you don't know that other person's going to step up.
Right. So about 25 years in the business and about looking to see over a 780 credit score, looking to see what type of LTV I'll be looking at to finance anywhere from, like I said, about 120 to 180 units on a new construction.
So I would tell you that's especially new constructions. You're probably. You want to jump in?
It's just a race.
Excuse me?
So it's, I'm stepping out here a second. George can talk about all day long about building a team and doing a capital raise. Like traditional banking and a ground up thing, man, respectfully, credit score has almost nothing to do with it. What's your experience? What's your capitalization? How many deals have you been a limited partner in? How many deals have you been a co-GP, a lead GP, a KPN? Like what's your track record? What can you point to from an underwriting perspective and say, hey, I've been in 12 deals and they've all been fully funded and they are their NOI was X. And then, for somebody who hasn't done one of these bigger deals, you're talking about 100 and something round up. Like if you don't have any experience in that place, like Elevate, partnering with somebody like Elevate that has 7 or 8 years, you guys have been doing these large deals. Yeah, JVing with somebody like this, like co-GP or even as a limited partner, but like being involved in the process, and have them co-sponsor on something down the road. Once they know you, like that's what Elevate does, man. Like you're talking to the right guy right here. Your credit score, you got Elevate.
That's what I don't think of you without the experience.
No. I mean, someone needs to have some experience doing it. Like you said, if you're partnering with Elevate and you've been a limited partner and you've seen how they perform, and you can say that you've invested and you've got the experience to your point. But I mean, there's so many factors involved with that. But I mean, shoot from the hip without seeing anything, I'm going to tell you it's probably 65%. And that's more so because
That's assuming whoever's applying for that loan.
yeah, can back that up. But also from the standpoint that during construction, we're going to float the rate. And so you've got probably likely, I'm going to go out on a limb, you can probably stabilize that thing. I mean, ending construction in 14 months to 18 months, stabilizing in 24 to 30. And so that's a long window of floating rate. And so we're going to bake that in as well and give ourselves some hedge because, again, we don't want it to go bad. So obviously, get pushed back and have to put more equity up front, you're getting more cash flow in the back end anyway. So I know it doesn't look great in the moment, but you want to be able to be owning that thing when it stabilizes and done, so you can either enjoy a long-term loan or you can flip out of it and roll into the next deal. So I know that's not a real good answer, but there's a lot of things at play, similar to what we were talking about there.
Yeah, when it comes to commercial, it's more about net worth, liquidity, and experience, I think. I don't even know that. I'm sure
They do. They do.
We did.
They pull the credit.
Yeah,
For
yeah,
sure.
we did. Yeah, we did.
I think you're good. I think you're good.
But they don't say it. Like I said.
Okay, quick fire for each of you. Let's go down the line. I want to know what is your one magical piece of advice for the newest investor or for the most tenured investor? A and B. James.
Expect more from your agent, man. I mean, expect more. Like, who cares what's a good quote? Like, what else you got? The value-added services on these kind of deals, if you have a portfolio, anything north of 100 units, like, there's meat on the bone. You should be getting